Welcome back to the Liquid Math channel, where we use AI-powered market analytics for crypto investors and to those who wish to learn about crypto market analytics. As of today, December 8, 2025, Binance Coin at around $900 is trading near the upper end of its long-term range while the broader market remains firmly in fear. Today's fear and greed reading is 24, placing sentiment deep in the cautious zone. At the same time, global markets are nervous ahead of key central bank decisions, energy prices are falling, and equity markets in both North America and Asia are under pressure. Yet BNB continues to show structural strength. That contradiction is where today's hidden signals begin. Signal number 1: a real, multi-time frame uptrend. When we analyze both the daily and weekly BNB price data together, a non-obvious pattern emerges. BNB has gained roughly 40% over the last 10 months, with a consistent positive drift across daily candles. On the weekly timeframe, the structure becomes even clearer. This is not a one-off rally, it's a multi-cycle structural uptrend. This kind of behavior typically belongs to assets with sustained demand and long-term capital participation, not speculative bursts. The hidden takeaway: BNB is behaving like a trend asset, not a momentum gamble. Signal number 2: risk-off macro, but altcoins are attracting flows. Now look at the macro backdrop. Canadian and US equities opened the week in the red. Energy prices fell sharply as demand expectations softened. Central bank uncertainty remains elevated with both the Fed and the Bank of Canada in focus. This is classic risk-off behavior in traditional markets. Yet on the same day, Solana rose more than 2%. Ethereum gained nearly 2%. Ripple advanced over 1%. Bitcoin dipped slightly. This is a quiet but important rotation. Capital is not fleeing crypto, it's subtly rotating from Bitcoin into higher conviction altcoins. BNB, sitting inside a confirmed structural uptrend, is positioned to benefit directly from this type of flow shift. Signal number 3: high price, low confidence. Here's where psychology and structure diverge. Despite BNB's powerful long-term performance, sentiment across the market remains fearful. This produces what we call a high price, low confidence regime. In this environment, the crowd is underinvested. Dips feel emotionally dangerous. Participation increases slowly, not explosively. Historically, this type of regime tends to favor gradual continuation, not immediate collapse unless macro conditions abruptly deteriorate. It's the opposite of a euphoric top. It's a market climbing while people remain uncomfortable. Signal number 4: volatility profile warns of sharp mean reversion risk. BNB's volatility profile is the final hidden piece most people miss. Daily volatility remains moderate, but weekly volatility is elevated. That combination makes BNB trend-friendly but dangerous for late chasers. When it corrects, it tends to do so quickly and violently, not slowly. This creates an important asymmetry. The upside tends to grind. The downside tends to flush. Understanding that balance is key to managing both expectation and risk. The Liquid Math Market Pulse Index. This week's reading is 66 out of 100. Neutral to constructively bullish. Strong long-term structure. Fear-dominated sentiment. Cautious macro conditions. And hidden rotation into alt exposure. Here's how the math frames what comes next. Base case. Macro remains cautious but avoids shocks. Alt rotation continues. BNB grinds higher, with pullbacks of 10 to 20% being absorbed by buyers. Bull case. Central banks remain supportive. Risk appetite improves globally. BNB accelerates and outperforms Bitcoin and large-cap peers. Bear case. A macro surprise triggers a global risk-off wave. BNB experiences a fast mean reversion drawdown before its long-term structure is tested. Importantly, the primary risk to BNB right now is external, not internal. BNB is not rallying on hype. It's rising within a long-term structural trend while the crowd remains fearful. That combination historically favors continuation, but with sharp corrections along the way. As long as the multi-timeframe structure holds and macro stress remains contained, the bias remains constructive. This has been the Liquid Math, where markets become mathematics. Please subscribe for the next crypto markets update and hidden signal breakdown.